Hey everyone, Andrew here from Finance OK. Now, this is not financial advice and everyone's circumstances are different. So this is just a hypothetical on how you can potentially buy a property in Australia using none of your own money. It's a pretty simple concept. It's been around for many, many years now, and it comes down to using generally mum or dad's property as security, and then you buying your own property. So it's called a family guarantor loan, and I will break it down with the figures. I'll use an example. You're buying for $800,000 based in South Australia on an established property. So let's work out how it all looks and how it all works, and whether or not this might be an option for you to get into the property market now instead of waiting. All right, guys, so let's do a breakdown. Buying a property in SA for $800,000. So stamp and other fees are going to be around about 6%. So if I bring up a calculator, say $48,000. So the purchase price is going to be $800,000, and then you got stamp duty, transfer fees, conveyancing, adjustment, all that type of stuff. So about $848,000 to buy. The lender will lend 80% of the $800,000 amount. So you'll have a loan amount for, what's that, $640? Let me double check. $640,000. So mum or dad will need to come up with $848 minus $640, $288. So this is if you have zero deposit, not putting anything into the deal at all. Mum and dad will need to do a limited guarantee for $208,000. So what that means, the bank will either do a first mortgage or second mortgage if mum and dad already have a current mortgage over that property for $208,000. You make the full repayments on the $640 and the $280. So you are borrowing the whole amount. You're borrowing $848. And your repayments are going to be on a loan for $848. So mum and dad have a house worth $900,000 with a current loan of $300,000. Max 80%. So most banks will lend up to 80% of the $900,000. Some will do less, but we'll just work out what some banks will do. So they will lend up to $720,000 less the current loan of $300, access to $420. Access to $420,000 on mum and dad's, but you only need $208,000. So that's fine. No issues at all. As long as mum and dad are happy and are willing to do a guarantor, they can do that. What happens if you've got $100,000 in savings? You could put $100,000 into the savings, and then instead of mum and dad doing 208, they are only guaranteeing $108,000. Now, what's the benefit of this? The benefit is that you don't pay lender's mortgage insurance. So if you borrow over 80%, generally speaking, you have to pay lender's mortgage insurance. So the family guarantor loan is very much designed for first-time buyers, great income, but they just can't afford a deposit because they're paying rent and they've got bills. But if they can afford the home loan repayments and mum and dad are willing to go guarantor, we do have options for you. There's a number of lenders that will help you. A few things that you want to keep in mind are mum and dad really don't want to be refinancing or selling their property in the next 5 to 7 years. If they want to do that, they would have to come off as guarantor, and then you would have to come up with the deposit. We can get mum and dad removed once you have a minimum 10% equity in the property, but then you would have to pay lender's mortgage insurance. So it somewhat defeats the purpose of doing a guarantor loan. But if you need to get them removed, you can get them removed. You just need to make sure you've got that minimum 10% equity. But I normally say work on 5 to 7 years as a minimum. You pay down a bit of a debt, property prices have gone up, they can be removed. I have had guarantors removed in as quickly as 12 months. Bought a property, it's gone up 20%, gone up 15%, and you've paid down a bit of a debt in the first 12 months. You can get them removed. But I always like working on worst case scenario. Now, remember, this is not financial advice, it's just general information. Banks change our policies quite regularly. Reach out, send us a message, give us a call, and we can run through your circumstances. Every circumstance is different. I'm going to do another video showing you how you can buy a $700,000 or $800,000 property with zero savings again, without a guarantor. That's a good one to watch. There are a few conditions on that. You do have to obviously have a bit more income to service everything on how it's going to be structured, but it is possible. There's so many options these days. If you've been told no by your bank or another broker, give us a call. We'd love to have a chat, work out how we can help you get your home loan approved.